Hey, welcome into the live stream today. We're going to be jumping into Bitcoin topics, and we will be looking at the sale pressure for Bitcoin and how this is potentially guiding the market, what this might mean to you guys in terms of the short term around cryptocurrency in general. We'll dive in deep. My name is Paul Barrow. Welcome back into TechPath. Let's get into it today because there's a couple of things that are happening within the ecosystem right now. When I say the ecosystem of cryptocurrency, it's all things from altcoins. Obviously, we know what's happening with the Ethereum merge and, of course, Bitcoin. Some of the scenarios that we've been facing over the past really 3 days has showed a very interesting sign that I think is starting to play out for what we've been talking about here on this show for quite some time, and that is possibly some downward pressure that might start to put positioning for Bitcoin and Ethereum back into a position for an acquisition, meaning me, as you guys know, we've been on the sidelines for Bitcoin. We still hold a lot of Bitcoin, sold some here on this short run, hold a lot of Ethereum, sold some here on this short run, but also are looking for an entry point. Sub 20 has been kind of my nirvana position. I think right now we're probably going to see some maybe sub 22s within a few days or weeks to really kind of point at being a run at this. Before we get started, I want to thank our sponsors, I Trust Capital. When you look at the crypto market, one of the things you should be looking at is long-term holding. Long-term holding, there's a couple of ways you can do that. You can look at things like parking your projects or your altcoins and your Bitcoin and Ethereum over on your wallets, or you can start to look at things that can give you tax benefits and also start to play out a bigger, longer term investment strategy. Remember, putting an investment strategy and building wealth takes a lot of different components. And one of the things I always do is diversification is number one. Diversification is very critical, and IRAs is part of that. Always when it comes to an IRA, I Trust Capital. Make sure and use our link below. It's one of the best links out there. You're going to get a $100 funding reward within it. And of course, you don't even have to actually put your assets in there just yet. If you're trying to learn if this is for you, just sign up for the service. They'll start to educate you on how it works. Very low entry, no cost to become, to get into I Trust Capital other than your investment. And then of course, just a 1% trading fee once you're in there and you're doing your daily trades, or maybe you're just parking stuff and let it run. But anyway, check the link below. It definitely will help us out. Let's jump over to a couple of topics that really, I think, will dictate where Bitcoin's next price point and also where its next window may show up in terms of pricing. Now, we're going to be doing some very heavy trend analysis toward the end of this week. We'll also do our macros and markets on Monday, and that's with Gareth Soloway. We'll dive in a little deeper because I do think this is going to start playing into Gareth's strategy and also some of the things he's been watching in the charts. And also what we've been looking at over time is that there could be a potential slip on where Bitcoin is starting to point. I'll show this to you guys on our sentiment data. If you do want to see the sentiment on our CPI for Bitcoin and some other projects, make sure and smash the like button. That's the number one way we know that you guys are interested in doing that, and always helpful. Don't forget, by the way, put some questions over in the sidebar. We'll try to get to as many as we can. Bloomberg, breaking Fed officials, judged in July it would eventually be appropriate to decelerate the pace of the interest rate increasing while evaluating the effects of the tightening actions to date. Now, what this simply means is that we're dealing with a scenario right now where the Fed is essentially saying, hey, listen, we don't think the pain is over. The minutes have kind of shown this. I'll break down a little bit more of what the minutes are kind of indicating and what kind of impact this is having on other sectors in the market. And I think some people look at the Fed minutes when they came out as being somewhat dovish or neutral. We'll call it neutral. Neutral to me is hawkish because we are in a market, there is no neutral. You're either going up or you're going to be going down. And that's because at this point, I don't think we have had enough runway either way, the runway coming in or the runway going out, to really be in a position to be in a sideways action. And I know the Fed is definitely not looking for that. So in this extended article, it kind of breaks down a little bit more within of what they were talking and speaking about. There was also risk that the committee could tighten the stance of the policy by more than necessary. This is kind of the over-tightening concern. to restore price stability, which is the big thing that Powell likes to talk about a lot in his meetings. So could they over tighten? That's still a question and still on the table for a lot of analysts to be looking at as we move into August and September here. Obviously, September being the next CPI and also the FOMC meeting. Fed officials also raised their benchmark interest rate by 75. We know that at the meeting for the second straight month. And then this was marking the fastest pace of tightening since the early 80s. Remember, that was a big one because in the 80s, we were really battling inflation and we saw a double dip. And there was a recursive to that. It did take on a life of its own in terms of interest rates. It literally took us like to the moon. It also was kind of considered as one of the things in modern finance that recorrected how inflation was structured within the United States. So could we be facing that kind of scenario? Still a little bit early, I think, to see, because as you guys know, I'm watching job numbers, I'm watching credit, consumer credit, and then I'm watching the housing market as it starts to fall out into these what was lagging indicators, the slower indicators that come in and give us a direction of how a recession potentially will pan out, because this will really boil down to what is the cost of money for businesses. Because if cost of money starts to affect business flow will affect jobs. Jobs obviously affects the economy and price stability comes back. If you look at this last point right here, following the minutes release, 2-year Treasury yields and the dollar paired gains, while U.S. stocks trim losses, and swap traders increasingly bet that the Fed will boost rates by 50 basis points next month rather than the 0.75 point. So that is, if there is one light, meaning the dovish or the neutral position, going to a 50 basis points, if you call that neutral, would be the scenario that they're pointing at. Again, we do not know, even though we were down a little bit on CPI numbers, overall inflation, we do not know what that's going to look like for the month of September, for August being reported in September. And I think that's going to be a bigger tell for the data that Jerome Powell talked about in his last FOMC meeting, of really kind of taking us into the next level, and whether or not we'll see some heavier pressure in the end of September. There's some interesting things right here on the S&P 500 at a major hurdle as global economic worries intensify. This is something you guys have heard me talk about time in. Sometimes I feel like I'm just preaching too much about this. This is the thing we're watching for, is this next downtrend. We do believe it's going to happen. There are too many indicators, too many macro positions that really kind of take us in this. If you've got a chance to watch our deal with Macro Alfonso earlier in the week, he really kind of dove into one of the several of the reasons that he too believes that this is going to be a much harder position to roll out of, for sure. Let's go in and get a drink. Okay, U.S. index tests 200-day average and also a bearish trend line. Also weak macro backdrop. High inflation obviously is a big part of this, and then rising interest rates. Current recovery similar to previous bear market rallies. This is where it kind of plays similar to what we've seen in the past. But I think at this point in the game right now, we're looking at some very interesting scenarios that have to take place. Excuse me. And some of those that are going to have to take place are, how is Bitcoin being sold off? And that is one of the key factors that I think is starting to showcase here in the market as we're kind of playing this out right now. If you look at just some of the things that have kind of hit the market, one of course is going to be crypto lender hodl, who is seeking judicial management to avoid forced liquidation. This again would be able to put more forced liquidations into the market, hence that we know, obviously we got the Mt. Gox scenario coming into play, and there's other aspects that are starting to play into this, to where we're going to see some movement in Bitcoin liquidations and or in overall Bitcoin pricing pressures going downward. And again, I think the CPI numbers in early September will probably force our hand a little bit more, because I think we're back up on a positive number, meaning positive above our previous report this month. But if you look at total liquidations, I was just looking at this one right here, and this is overall, but total liquidations right now, as you can kind of see, there's 70,000 traders were liquidated just in the past 24 hours. So again, 2.12 million in Bitcoin and about 9 million there in ETH. So that's kind of just the overall. I think that's the 1 hour right now on liquidation. So I still see this as being a position right now where we're going to continue to see some pressure on Bitcoin, which of course we know what that means for altcoins and many of the other market components. Stronghold is shifting focus from Bitcoin mining to selling power as it restructures debt. This is also a sign that I watch very closely when it comes to miners of how are they dealing with the current market conditions and are they able to ride out this? Because remember, costs to operate a mine and a mining operation do not necessarily go down. In fact, if anything, they go up in a bear market because of the need to be able to continuously ramp up your operation if you're planning on growing. It's usually the time when you're doing capital expenditures, things of that nature, to get ready for the next leg up. And that's one of the things that I watch very closely. If we start to see miners, one, doing provisional sale-offs or doing something like this, trying to figure out another way to generate revenue, it's always a little bit concerning to me. But Bitcoin miner Stronghold announced a series of deals that cut down its debt by more than half. This is a normal thing. Deals involved returning about 26,200 mining machines to lenders. Company said it would also be shifting its main focus away from Bitcoin mining, which is huge, and selling power to the grid in the next few months. The miner also fell short on analysts' expectations for the second quarter with about a $40.2 million loss and a $29.2 million in revenue. So I think this is a problem for mining in general. The company also eliminated $67 million in outstanding debt with NYDIG. Debt restructuring, typical of these kind of scenarios. One thing though that I have watched in business over the years is in a market where you start to see the interest rates real interest rates starting to affect the cost of money. Debt restructuring at that period of time, it's not a good thing because of the fact that most of the scenarios is you've acquired that debt at a much lower rate. So having to, one, assess that and burn out your cash, which is a huge issue of having to let some of your cash go, especially when cost of money is starting to accelerate. Because that, if you look out 12 months, 18 months down the road, we could be in a lot more dire position in terms of cash availability into the market. Now, sure, there will be markets out there that are going to be, abiding by what the demands are from the cost of money. But the real situation is a lot of the mom and pop, typical businesses will be having a much more difficult time of getting money. Selling pressure also, this is a piece from Arcane Research that breaks down into selling pressures from the public Bitcoin miners. Even though they think it is easing a little bit, they're still dumping their Bitcoin holdings, but not necessarily at the same extent. So that's a good thing. You can kind of see the spike that we saw here over May to June, July, down quite a bit, but still over the previous high month, which was May, considerably up from the early months in the year. So a couple of things that they are focusing in on, and this is back to my point. Let me kind of zoom in on this one. Why have they been dumping their Bitcoins? Funding expansions. This gets back to my point earlier where these are the times in which you actually want to expand because when bear markets are, you have the capacity to do that. And in most cases, you've got a stockpile of cash, hopefully if you've been selling off as you go. And they kind of go down through significant upcoming expenses related to massive expansion plans. There's obviously three ways miners can fund capital, equity, debt, or internal capital itself. And then number two was avoiding liquidation on Bitcoin machine collateralized debt, so forced selling. That was back to the point that I just talked about earlier where people were actually returning machines. So that I think also plays into this. Now, the way that Arcane plays this out, if you look at Core Scientific, Bitfarms, Northern Data, Argo right there, and then CleanSpark, just to give you an idea of the top 5 Bitcoin sellers in this bear market. These are the sellers, obviously. So Core Scientific being the highest in May, June, and July. But if you look at July, still right there, a lot of Bitcoin out of Bitfarms and Core Scientific, and then also out of Argo. So I think this is still a factor in the marketplace, which when you have selling pressure like this, you're going to push the price down because more is available, there's less buyers, and obviously the price goes down. So that is just market making operations within any live market like what we deal with within Bitcoin. The real question is going to be, is this going to push Bitcoin into that next zone that everybody's kind of been pushing to, which is around the 20K zone. And then there's a lot of people that are pointing down below that. I think there's more macro that has to occur outside of what we see just from the miner operations that will determine whether or not we see a sub 20 Bitcoin. And I'll talk about that in a second. Don't forget, guys, make sure and put your questions in over at the side. And we love to get likes. We're trying to build the number of likes here on the show. It does help with the algorithm, but more importantly, this helps people discover the channel. And, you know, if you're new to crypto, you probably got turned on to crypto by someone. Maybe you did a YouTube search, or maybe you did a Google search and you found us that way, but most likely you got turned on to crypto by talking to someone and learning a little bit about it. And for those of you that are OGs, this is the way you help not only us out, but help the market out. Because the more people that learn about this asset class, the better it is for the overall community, and hence why we want more likes on the video. So Bitcoin miners holding about 27% less Bitcoin after 3 months of major selling. This again, just reiterating my point here, but miners nearly selling off 30% of record Bitcoin stash since May. Again, I think this eventually slows a little bit unless we get to critical points. Now, critical points in price could trigger another big sell-off. And we talked to Sue Ennis, she's kind of our insider with the mining industry from Hut 8, and she's been on our show many times, and she mentioned this in the last time we had her on, is where is that magic number? I shouldn't say a magic number. Where is that pain number for Bitcoin? And I think for Hut 8, it was around 14K. If we saw those kinds of numbers, that's the only area that I think we get into sub 15, we will see more mining operators really kind of move into that direction. The other thing that I think is going to put some more pressure on this is you still have Celsius in the mix here. You got creditors now wanting to pour a little bit of water on the Celsius mined Bitcoin sale. And this means a lot because if you look at the overall amount of, and remember, Celsius was in the process of trying to get into the mining business, and they were trying to go public with their mining operation. But Celsius basically said, hey, the subsidiary, this is the one that filed for bankruptcy, the parent company, they had 80,500 mining rigs, all worth of up to around 750 million. And then what they're trying to do is get some approval on being able to sell a certain amount of their assets. So last month, this is Pat Nash, he's their lead attorney, asked the creditors to stay their hand. So in other words, don't pull on the fact that you want to get liquidated and take a long-term view. He urged them to basically wait for prices to recover. I don't think this is going to happen. I don't think we're going to be in a position where prices recover to a point where Celsius is comfortable. And this isn't really about Celsius now. This is about the creditors and the bankruptcy court, because everybody's vying for a position, kind of a pole position on getting their liquid back. So I think it's going to be a big deal. And I think this is going to push Celsius into a position where they do have to sell their Bitcoin, or a large portion of it, which again will put more selling pressure overall. Now, this is another note right here. Selling Bitcoin doesn't necessarily mean you're not bullish. And this is something that even I do, all right? So, and I don't mean that in a bad way, but the strategies that I take are pretty simple. Again, we'll do market movers like this, where we're giving you guys a rundown of cool stuff in terms of insights and research, and even provide you some data on our own power index stuff. But it's not investment advice, but I'll give you an example of what I do. Everybody's portfolio is a little different. But the things that I really focus on is there are windows in which I take profits. And an example would be, let's just go with Ethereum and Bitcoin on this nice little 25K run. So there was some potentials in there because I had some sub $20,000 Bitcoins. And this was my option to be able to take that 20% gain, 25% gain, and be able to exit on those. And it doesn't mean you sell all your Bitcoin, but it does mean you take profits. Same kind of scenario with Ethereum. As you guys know, I've been exiting the Ethereum position over, and if you're in our mastermind, you guys have already heard our moves on what we do over there. We were selling all the way up to 2,000, and then we were waiting on a certain amount of our bag for the merge, which is still kind of my overall strategy. But you can still be very bullish on this, and also in a position where you're selling a little bit of your Bitcoin, because I know the maxis will freak out when they hear that. Don't sell your Bitcoin. But the real reality is you should be taking profits anytime you can. Do not get caught holding these, because in some cases you may hold a $19,000 bag right now. Let's say you have one Bitcoin and 19,000, you could have sold it for 25, 24, 23. Those are really good juicy gains, and you'll have a chance, I believe, to get that $19,000 bag again. So still a lot coming down the pipeline for sure in terms of where this is going. Now I do want to get into the index here for a minute, and then we'll show you guys some stuff, and we've got a poll coming in too. There are some new things that we've added to the power index. One thing that we did here recently is on the dashboard, when you're in it, you guys will get a chance to see some of our top crypto. This is the overall market. Obviously, we see almost everything trending down right now. But if we go to top crypto, we'll take a quick look at Bitcoin and Ethereum. Bitcoin obviously has been wavering right here. And really about right here on the 10th of August is really when we started to see that down pressure. A little bit of an upside and then down, but overall, market was trending down. Amplification had been pretty much flat and down, so we definitely see that still holding. Ethereum kind of starting its little track downward. It has been holding pretty closely, but one thing I watch with Ethereum is this right here. Notice how close amplification had been running with Ethereum during this run up to $2,000. This is a very important scenario. With Ethereum, this is a big indicator. When I start to see AMP and overall top-line sentiment kind of diverge, it does give me more incentive that we're going to see some more downward movement here. So this is a good example. But one thing we've done here, let me go back here to the home screen, is we've added in our, let's go back to dashboard, our CPI home, and we've added in sentiment ranking, which we used to do on an ongoing basis, but now we've put this into our altcoin ranking and our metaverse. And this is of our live tokens that we measure. We've started to ramp up the number of tokens that we are tracking now, and then we're giving you guys the basically an AI sentiment ranking of those tokens that we have that we're monitoring on an ongoing basis. So it's basically kind of ranking our own book, and the book that we track all the time. Doesn't mean we're investing in every single of those ones, but it does mean that we track these. This will actually be released every time we release a new update. So this is really cool. It's a new feature. We do this also with Metaverse and Gaming. If you look at Metaverse and Gaming right now, you've got Sandbox coming in at number 1, Theta number 2, Axie number 3. This is scoring both overall sentiment and amplification. And you'll be able to get that both on alts and also on Metaverse. So, and again, this goes back into our active tokens. So just a tool that you guys can use. And of course, we show this on the show every once in a while, but if you do want 24/7 access, it's easy to get into. Let's get into some questions here. Jen has got a question for us. Great info, but does seem to be a US-centric point of view. I would disagree with that, Jen. Here's why. Because I look at a lot of global macros right now. China is one of the biggest areas I follow. And right now, watch our video that we did with Alfonso, Macro Alf, just I think it was yesterday or the day before. And he and I got into it about China and what's happening in the real estate market over there. The reason is the real estate market inside China has such a trickle-down effect into the rest of the global economy in so many ways, including supply chain. So what we're dealing with here in the United States, sure, if you look back in, and we talk about a lot of Europe nations, we don't get into South America as much as we probably should. Right now, we mostly look at Europe, China, and Russia. Those are the big factors that we're looking at in terms of macro, mainly inflation, geopolitical positioning, and then economic pressures that some of these other countries are faced with, because it obviously drives in to the power of the US dollar, global reserve. All of that plays into the US market, which is the S&P 500, hence pushes on pressure into, guess what, cryptocurrency. So we definitely do follow in that direction. Oblix, was there positive XRP news, XRP up a bit? Yeah, so there was a little bit of XRP news. We reported on it earlier in the week. One was that they're looking at, this kind of played a little bit of a hand for XRP, kind of an interesting position. is that they were looking at a potential acquisition of some assets from Celsius. They were just kicking the tires. It doesn't mean they're going to do it. Maybe they will. Who knows? What was more important was that it showcased a roadmap. I feel like a roadmap indice for XRP, well, Ripple, and that is that they're trying to get into the retail sector. If they're trying to get into the retail sector, it changes things very, very interestingly into the fact maybe they know something is about to unhook over here on a potential deal. That's why I think XRP. And there's a small amount of news, but I do believe it's just the fact that people are seeing there's some movement with XRP, and not everybody knows exactly what is going on. Matter of fact, we'll look at XRP. Let's jump to a poll real quick. And while that's happening, I'll pull up XRP here. All right, so how likely is a 10K Bitcoin? Guaranteed, low, likely, unlikely, 47%, impossible, 11%. So you guys have heard a couple of analysts on our show that have called for 10K Bitcoins, and you know my position. I'm on record here. I'm looking at the low teens. And it is a scenario that we could see that occur. There are some factors that need to play into it. So far, all the things that I've been looking at, those are happening. CPI is going to have continued pressure. Interest rates will continue to go. Housing market will start to soften. Jobs eventually will catch up, and we'll see softening and credit. That's the next one. That fifth component is consumer credit. That's the one that I think will be a little bit of a deafening blow on the economy and cause a big retraction in the market. Because remember, everybody's rolling up toward the end of the year, which means we have Q3, Q4 earnings. And with this kind of pressure on the market, if we do see spending coming off the American consumer, guess whose numbers are going to start dropping? You're going to start seeing things like Tesla, Apple, and a lot of the kind of the stalwarts of the S&P 500 actually come in with bad or negative earnings. And that would be a massive hit on S&P, because we're not decoupled, hence boom. Let's get back over here to XRP. Let me jump over here because I wanted to see that one as well. So here was the XRP numbers. Let's see, where is it going? So it's down. It had that little bit of a lift, but again, just a little bit of a lift right here, and then a downward trend right here on where XRP is right now. It's still kind of sideways. I think this is going to be interesting to watch on the next print that we do on Friday to see where this one is going. We do daily. We're trying to get eventually on CPI to a daily number for you guys too, as well. All right, Christopher, China is the X factor for sure. No doubt about it. China is the X factor right now, because if it doesn't go well in terms of their position in their real estate market, this could have a massive effect on the global economy, pushing maybe a lot of countries into true recession, possibly even worse. If I've learned anything about markets, it's that the market tends to do the opposite of the consensus. And I think the consensus, I don't know where the consensus would be right now, because at least for me, sometimes I get too close inside the bubble. For me, the consensus is downward. But at the same time, I watch a lot of analysts that still believe there is upward sign. I was just watching an analyst from MIT just the other day, and they were still pushing up, is that the back half of the year was going to be a big positive. So I think it's kind of split right now with the market. I don't know that any one narrative is taking a position just yet. If you're watching our show, you know what our narrative is. We think we're going to see a downtrend. No major movements till after November 18th or November 8th. That'll be obviously midterms. If Republicans take both houses, that is another thing I've talked about here before, is that all of this plays into the midterms. The midterms could dictate the pullout of this recession and how we really kind of correct, because it could start to give us indications on how regulation might play into it. So yes, you are correct. Apple is close to all-time highs with iPhone 4 releasing soon. They are a monster. Crypto golfer, I'm going to go on record right now. Apple is going to lose position, not in the market. The people are just not going to be buying as many of them. And if you looked at their last quarter earnings in comparison to last year, a little different. I think we're going to see downward trend on earnings for Apple. So just my feeling based on what I see. And also remember, the number one thing that drives Apple, you would think, what do you guys think it is? I would just put it in the comments, but the number one thing that drives Apple is the middle class. It's the middle class that drives the sale of iPads, Macs, all those kind of things, especially the iPhone. If the middle class is going to be the one that gets the hit here, which most likely will be the case from price scenarios and price sensitivity because of what we're seeing in inflation, what are they going to do? They're not going to be buying iPhones. iPhone 14, I'm going to say that we will see a downward trend on that. So this is where I think it's going to happen. What happens if institutions start to buy? Well, regulation is going to have to happen before that occurs. Even though we will see, I think, positioning. Positioning is good because they're getting ready. Is Paul going to buy XRP? Well, I don't ever really talk about Paul in the third person, but I do own XRP, and I would probably get some more if I could. You guys know the situation there. Nature, which coins are going to soar when Bitcoin starts to plummet? That's a good question, because I'm going to be watching sentiment data. There's a couple of projects I do think that will get some run when Bitcoin starts to come down. And ETH may be one of them, because we may see a diversion from ETH because of the merge. Listen, this is a very interesting time right now. Chart watching, analyst analysis, sentiment data, those are the things I am constantly on top of, and I do think they're going to continue to play a big role in how we play this out, because there's going to be some opportunities here, guys. Opportunities to really jump in and do something really cool. Maybe make the biggest trade of your life right here. It's coming. ETH play, huge role on Bitcoin if 2.0 is successful. Yeah, it will. It may be the scenario that I still believe, and this is something I was talking about earlier, is that maybe Ethereum was actually the one pulling Bitcoin on this little mini rally. This is something that we've kind of been speculating on here in the pit. And I don't know, with the amount of sentiment that we saw on ETH and kind of lagging sentiment on Bitcoin, I don't know. I think there was a very interesting scenario to watch there with Ethereum. And whether or not it's priced in, I'm still kind of on the fence about that. But I do think the merge is going to be a very critical component. Again, if the merge happens, we'll know in a few weeks. So very cool. Paul, what do you think about the catalyst for Bitcoin to move higher since we are entering an interest rate raising environment? So the catalyst for any asset to start to move higher, and this is something that Kevin O'Leary was talking about just the other day, is if you move on an asset class in a period too late in a cycle that starts an uptrend, you're basically just jumping on the bandwagon. Sure, you're going to make profits and the market's going to go up, but what you're looking for is actually to buy when the most pain is there and be able to tolerate a little bit of further pain, because that tells you bought at the bottom, and then be able to ride that pain out and get moving. So the things that I'm watching for right now, macro-wise, is I'm watching China very closely, because I think this has a bigger effect on the U.S. economy than a lot of people think. I am watching credit, consumer credit, and I'm watching the housing market very closely, because it has such an effect on supply chain and so many other commodity-driven narratives. And commodity-driven narratives affect the S&P. S&P obviously start to move markets around, because that's where liquid is trying to find a place to go, just like water. It tries to find a place to go, and that's when I think it's going to be magical for digital assets. So all those things we're watching very closely. People need to stop with the 13K Bitcoin. It's not happening. I sure hope that you are correct, that we do not see a Bitcoin 13K, because we will see some pain in the market if Bitcoin goes down to 13K. We saw 17 for a short period of time. It indicated that Bitcoin has that capability, but the real question right here, and don't believe, 50% from the S&P, yeah, absolutely. Go look at the chart on just Google and Apple, and then look at what we've seen on other high risk tech stocks and the kind of high risk tech stocks and the kind of losses that they've been able to encumber just in the last 12 months. So it's definitely a possibility. If you look and talk to a lot of the analysts, they are kind of pointing in this direction. So don't be too close-minded, guys. Don't be too close-minded. Just be conscious of where the market is. Get into trades, take your profits, and be ready and keep as much cash on the sideline that you can to be able to jump into these deals. Because right now, even if you were buying and dollar cost averaging right now with Bitcoin, think about where you would be versus where you were at maybe just a few short days ago when Bitcoin was 25. So a lot happening there. All right, you guys are listening in over on the podcast right now. Thanks for tuning in. But the live stream is where it's all at. It's where we do our breakdowns, our analysis, our sentiment. Sometimes we'll do charting over here. We get into a lot of this on the macro side. We get these great interviews. Just join us over here on YouTube. It's really easy. Like a few videos and make sure and subscribe to the channel. That's the number one thing you can do, because that way you're going to be able to get out there and get our live stream updates, all that cool stuff, and be able to stay tuned in here with some of the breaking stuff that we do on an ongoing basis here on PBN. If you guys want to reach me, it is out on Twitter at Paul Barron. We'll catch you next time right here on TechPath.